So we're hearing a lot of talk, and even there's a lot of statistics saying that seed stage investing is slowing down. There's a Series A crunch. Where do you see things from your perspective?
Well, I think there is, some of that is a fact, but I think you have to look at not just the quantity, but the quality of what's happening. And a good indicator that would balance like the number of investments going into a market like New York would be the number of exits and the quality of exits. And I think over the last year or so, we've seen some important ones in New York, like you could think about Tumblr going to Yahoo.
For more than $1 billion.
For more than $1 billion. Buddy Media going to Salesforce for almost $1 billion. In the last month, one of our companies, Tremor Video, had their IPO. You had MakerBot just last week, Adapt TV. So there's a robust and healthy exit environment as well.
The Times actually had an article about this a few months ago saying there are about 20 to 25 companies in the New York ecosystem that could be valued around $1 billion. Do you feel like that's a good estimate?
Yeah, well, I'm not sure the exact valuations, but I know you're hearing a lot of IPO rumblings, and you're seeing companies that, like Adapt TV, that have been talking about IPO but got acquired instead. So I think those two things go well together. And the fact that a lot of it is later stage financing that is happening, like just I read that $1.6 billion worth of financing has happened in the first 6 months of 2013. 3 of them were just first-round companies alone. One Fab, one AppNexus, and then the IPO with Tremor, and they totaled $300 million. So there's significant later-stage financing that's here in New York as well.
So when you speak about this later-stage financing, it seems as if, from what you're saying, companies are more willing to go public than they were maybe, let's just say, a year ago.
It's very much an option. The window, I would say, is open. The other thing I'd say about the New York market that's pretty important is big internet giants like Google, like Facebook, they're putting roots down and stakes down. Google bought a city block. Facebook is doubling down.
I mean, Yahoo's made it pretty clear that it's going to be an acquirer and for premium.
And it's not just a sales office for the West Coast headquarters. They're putting engineers, developers, designers, and they're building out what will be the next, the engine for the next wave of startups in New York are those people.
Chris, out of curiosity, when you are beginning to back at the seed stage, do you tell entrepreneurs, if you're not going to be a strategic fit for a Google, for a Yahoo, an IAC, or an Amazon, maybe you should rethink your strategy? Do you ever say that?
Well, I think that's clearly one of the options is M&A. We try and help. We think the purpose of seed stage investing is to help the entrepreneur validate or disprove or de-risk their hypothesis, and sort of who might be your likely acquirers would be certainly part of that.
I know one thesis that you're following is this kind of blend between online and offline. Warby Parker is one really good example, but we've seen it a lot in the retail sector where you have a very strong and primary online presence, but then these kind of pop-up shops.
Right. So Warby Parker is one element of that, where they built a big brand online. They've sold over 500,000 glasses, fashion eyewear glasses for $95. And then more recently, in the last year, they've opened up a physical store. They have a big, beautiful 3,000 square foot store in Soho. It looks like an Apple store, but instead of a Genius bar, they have an eye exam bar. And we were there the other weekend. It was just absolutely packed. But the key is they built a brand online, and then they took it offline so they can give their customers the best of both worlds. And
Uber is another one of your investments, and that's a little bit trickier because I'm, for example, not actually buying a car. I'm just using a car service, so obviously you need a car to show up, but it is this kind of hybrid between online and offline activity.
Yeah, so you mentioned earlier at the top of the show, I came here in an Uber today. What I think it represents is your smartphone is becoming the remote control for the physical world. You stand on a corner and push a button, and a few minutes later, a black car pulls up in front of you and takes you where you want to go, and it's matching up supply and demand. There's empty seats in the back of limos with people that need to go places.
And we've seen the same kind of idea function with Zipcar and this whole idea of the sharing economy as well.
Yes, absolutely.